Hi, my name is Stephen Shapiro. I'm a corporate and securities lawyer, a partner at Percher Nichols and Meeks in Chicago, with its main office in Los Angeles. I am primarily a lawyer that specializes in business transactions, bank financing, securities offerings, mergers and acquisitions, corporate reorganizations, spin-offs, as well as IT contracting. Recently, I returned to the private practice of law after serving in-house as general counsel of Colt Taylor Bank, First Midwest Bank, eLoyalty Corporation, and as deputy general counsel at FMC Technologies. The topic today is raising investment capital, specifically through private placements and exempt transactions. What I plan to do today is to run through the methods of which companies can raise money by issuing securities in the private market and put it in context of all types of securities offerings. So I'll begin by talking about the relevant securities laws. There are several securities laws that we're going to touch on in our discussion today. The next law is Sarbanes-Oxley Act of 2002, also known as either SARBOX or SOX. Dodd-Frank Wall Street Reform and Consumer Protection Act was adopted in 2010, just referred to as Dodd-Frank. The Jobs Act was adopted last year in 2012. It doesn't stand for Steve Jobs, but Jump Our Startup Businesses Act. And lastly, there are a number of securities releases, staff bulletins, regulations, no action letters, and court cases at the federal level, and also state laws and regulations. You may not make any untrue statement of a material fact or omit to state a material fact. Now, what does that mean? Well, first of all, you look at materiality. And what does material mean? Now, I spent a lot of my life arguing about materiality. It means significant, enough to move the needle, however you want to describe it. The SEC has specifically disavowed a definition of materiality. In Staff Accounting Bulletin 99, which was adopted in 1999, logically enough, they listed any number of factors that could be material in any given context. But they specifically refused to say whether it's material, said it depended on the facts and circumstances. Well, it doesn't really sound that helpful. On the other hand, it's almost impossible to determine, in a general sense, what's important. Is a company's revenue important? Yeah, that would be material. Is a company's trademark important? Well, certainly more important for Coca-Cola than a company that's in the manufacturing business and sells its products to another business. And so the SEC gave itself a great deal of wiggle room and